Christopher Vincent here with Sotheby's International Realty Canada in Canmore and Banff. Today we're breaking down the Canmore Bow Valley real estate market for Q1 2026 as we head into spring. And there's a clear shift underway. Inventory is rising, the market is becoming more balanced, and opportunities are starting to emerge, depending on where you're looking. Let's start with the big picture. Through Q1, we've seen a noticeable increase in active listings across all property types. Sales activity that is stable but uneven month to month, and pricing that remains resilient overall. February stood out as the last strongest month of the quarter, particularly driven by activity in the short-term rental segment. But overall, Q1 is still tracking below the peak activity levels we typically see in Q2 and Q3. The key shift here is supply. We're no longer in the ultra-low inventory environment of 2021 through early 2023. Instead, we're entering the spring market with more listings available, which is creating a more competitive and balanced landscape. Let's start with short-term rentals, tourist homes and visitor accommodation. This is one of the most dynamic parts of our market, but also one of the most misunderstood. In Q1, we saw a spike in sales, particularly in February, but it's important to understand that these spikes are not driven by resale demand alone. They're tied to new project releases, where inventory comes to market and is often absorbed very quickly. So what does that tell us? Demand for short-term rental properties remains very strong. New inventory is being absorbed quickly when released, and the resale market remains relatively tight. Inventory levels in the segment have increased, at times pushing to the 3 to 6 month range, which puts us closer to balanced conditions. On the pricing side, 3-month average price of sales are trending back toward and above $1 million mark, depending on product type. So overall, this segment is transitioning toward balance, but it's still supported by strong investor demand and Canmore's year-round tourism appeal. Now, let's look at detached and semi-detached homes. This segment saw the most change for the past 6 to 9 months. In late 2025, inventory levels pushed as high as 10 to 12 months of supply, which is firmly in a buyer's market. In Q1 2026, we've seen that normalize. Inventory is now sitting closer to 3 to 5 months, depending on the timing. Sales remain inconsistent, particularly at the high price points, and pricing is stable but no longer accelerating. We're also continuing to see a gap between the list price and sale price, which tells us that buyers are negotiating more than they were a few years ago. This segment has clearly moved from a buyer's market back into a balanced market territory. Townhomes continue to be the most stable part of the market. Inventory levels are generally sitting in the 2 to 5 month range. Demand is consistent across quarters, and pricing has remained firm, with 3-month averages typically ranging from about $1.1 to $1.5 million. This segment continues to attract a wide range of buyers, full-time residents, second homeowners, and investors looking for a lower maintenance option. Overall, townhomes remain a balanced and predictable segment. The apartment condo segment is where we're seeing the biggest shift. Inventory has increased significantly, at times exceeding 6 to 7 months of supply, after briefly spiking even higher earlier this year. At the same time, sales activity has been more variable and average prices have softened slightly, but this is largely driven by new entry-level product coming to market, which is pulling down average price metrics. What does this mean in practical terms? For buyers, more selection, more negotiating power, and better entry points into the market. For sellers, increased competition and a greater need for strategic pricing and presentation. This is clearly defined by the segments which are in today's buyer's market. Across the board, pricing remains resilient. We're still seeing strong long-term appreciation trends, particularly in detached homes and townhomes, but the market becoming more sensitive to pricing strategy, property quality, and competition amongst the segment. Days on market have also increased slightly compared to peak years, which is a sign of a more normalized functional market, not a slowdown. So what's the takeaway? We are at a transition point. Inventory is rising, the market is becoming more balanced, and conditions are now segment-specific rather than one overall market. For buyers, this means more opportunity, especially in apartments and selective investment properties. For sellers, It means strategy matters more than ever. Pricing, timing, and high-quality marketing. Long-term fundamentals for the Bow Valley remain very strong. Limited land, strong demand, and lifestyle continues to attract buyers from across Canada and internationally. If you're considering buying or selling, be happy to walk you through how these trends apply to your specific situation. Thanks for watching. See all the graphs at Canmore Banff Realestate.com, and we'll see you in the next update.